ABC Bullion's 360 weekly wrap. My name's Bron Secchi. I'm joined by Nick Frappell, Global General Manager at ABC Bullion. Welcome, Nick.
Hey, Bron.
Gold had another sort of hit this week, but it's held up pretty strong. How do you see it? Got off 1910, I think was the low.
That's right. It's 1910, 1911. So last week we had really good PMI data on Friday from the States, PMI, manufacturing PMI, services PMI, they were good. Housing starts were good earlier on in the week. All of those things were, effectively negative for gold. The other thing is the FOMC notes were also...
A lot of commentary made about that.
Yeah, a lot of commentary made out of them. When I looked at them, it was a little bit subtle. I think it was the economic data that really mattered in the end.
Yeah.
The important thing for gold is that the price came off and almost touched the weekly turning line support, which was at 1909, and then rebounded. So above, say, 1950, I'd say look for 1980s, 1990s, a recovery there.
Right.
But definitely there's an element of gold being in profit-taking mode. At the moment. Gold ETFs did increase a little bit, but for gold futures, there was an element where there was some selling of futures, some reduction in longs. Interestingly enough, there was the reduction in shorts as well, which sort of implies that the previous week's shorts were quite nimble to sort of get some profit when it came off. Yeah.
Right. What about silver then? Its ratio sort of bouncing around the 70 sort of level.
That's right. It looks like 70 is a level where people are quite willing to say, look, silver's sort of its
had a really
recovery and performance has been good. And I guess, if you look at where it's come from, plus 100 earlier this year, that's not unreasonable. Again, silver basically held above the weekly turning line. I reckon above 26.90 in US dollar terms.
Yeah.
Look for moves to 28 and thereabouts. Both metals are still in a sort of bullish, sort of pattern, bullish formation, but they've done an incredible amount.
Yeah.
So, drawbacks should be expected. That'd be normal. I think we saw a reduction in futures, 17 million ounces up to the week on Tuesday. There's been, a bit more than that. There's been more reductions since then, open interest of about 17 million ounces. So that implies, again, more long liquidation post last Tuesday.
Yeah. So Nick, the Aussie dollar is sort of a bit sideways again. I mean, what's going to drive it from this point?
Well, coronavirus is one thing, but also the recovery, broad-based recovery in the dollar index. Last week we saw signs of that. I think there's a couple of things. Firstly, DXY, the dollar index, reached a fairly important target, just over 92, so it's cycling back higher.
Right.
The other thing is technically the dollar index looks pretty oversold, so any good, decent economic news that comes along will tend to boost it.
Right.
So I think that'll place the Aussie relatively on the defensive.
Yep.
I think support for the Aussie in the short term's 0.7050 against the US dollar. Looking at the coming week, there's a couple of things perhaps to be mindful of.
Yeah.
And again, these obviously could translate straight into gold moves as well as Aussie moves. There's US core durable goods coming up. And also on Thursday, Fed chair is actually going to be making a speech at Jackson Hole.
Oh, yeah. Virtual Jackson Hole.
Virtual Jackson Hole, Zoom Jackson Hole, where he's going to be talking about changes and updates in the monetary policy framework.
Right.
How exciting is that? But the interesting thing
we're all thrilled.
We're all thrilled. It'll be interesting, and he's going to take questions on that because it is at a virtual Jackson Hole. So that's on Thursday evening. So Thursday, Friday,
Friday morning for us.
Friday morning for us, well worth looking at and just being cognizant of that sort of fresh news coming into the market.
Okay, interesting. Thanks, Nick. Stay in touch with the markets by following us on our social channels, as well as at abcbullion.com. Thank you.
Thank you.